Ever wondered what goes on inside the mind of a trading machine? Well, today we're going to do just that. We're going to follow a pretty sophisticated algorithm called the Omni-Profit Nexus through one single, really volatile day in the market, from the opening bell to the final verdict. Let's jump in.
So here's the big question, right? When the market is just a storm of noise and conflicting signals, how does a machine, a collection of code and rules, actually navigate that chaos? We're about to see its perfect plan collide head-on with reality, minute by minute.
All right, so the day begins, but it's not with a bang. It's more with a whole lot of caution. Before the market even opens, the system is already on high alert, taking a defensive stance based on what it's seeing in the pre-market.
The first thing this machine does is size up the room. It has to define the environment, and for today, it classifies the market as transitional/cautious risk-on. You can just think of this as a big, flashing yellow light. It means, yeah, the market wants to go up, but everyone's super nervous, it's fragile, and things could flip on a dime. This one label is going to dictate every single move it makes.
So how does a machine measure something like nervousness? Well, it looks at the VIX, which you've probably heard called the fear index. And it has a very hard rule, a fragility threshold set at 16.5. Today, the VIX is opening higher, at 17.17. That means the system is automatically in the red zone. This isn't a suggestion, it's a command. Holding defensive positions or hedges is now mandatory.
Okay, so with that defensive, cautious mindset locked in, here's the initial game plan. The system's watching four main assets, but I want you to look at that last one, Tesla, ticker TSLA. You see that? The system has a clear bearish bias. Its starting bet, its core assumption for the day, is that Tesla is going to fail at a key price level of $335. That's the plan.
Of course, as anyone who follows the markets knows, the plan is often the first casualty of the opening bell. And this is where our whole story takes a very sharp turn. The market is about to look at the machine's core assumption and laugh. And look how fast this all went down. At 10:23 in the morning, Tesla is just knocking on the door of that $335 resistance, that fragility wall. But by 10:32, it's not knocking anymore. It's smashed right through it. And just 9 minutes later, it's already hitting $340 a share. We're talking less than 20 minutes for the machine's entire morning plan to be completely blown to pieces.
So this, right here, is the most crucial moment of the day. The pivot. The system's own rules forced it to do a complete 180, to abandon its bearish bet and flip to a long bias, now betting on the breakout. See, this shows it's not about being right from the start. It's about having the discipline to adapt instantly when the market proves you wrong.
Okay, so the machine was forced to flip its script completely. The big question is, did it pay off? Let's dissect the trade that it ended up making. Let's cut right to the chase. The bottom line from the series of trades the system fired off on Tesla call options, a realized profit of $593.
And yeah, the dollar amount is nice, but in percentage terms, it's even more impressive. That's an average return of over 102% across those winning trades, a really powerful result from a strategy that began the day pointing in the exact opposite direction.
But here's the thing. The system's logic didn't just stop once it bought in. It had a pre-programmed exit strategy it calls the tiered exit ladder. So instead of just dumping everything at once, the plan was to sell off pieces of the position at different, higher price targets. This way, you're locking in profits as you go, but you're still leaving a little bit on the table just in case it keeps running. It's disciplined, automated profit-taking.
And that brings us to what might be the most important, and for humans, the hardest, part of this whole story. The system is in a winning trade, it's running hot, and now it has to decide when to get out.
I mean, think about it, right? The trade's a big winner. The classic saying is, let your winners run. So why on earth would you cash out so quickly? This is where the system's risk management rules, its guardrails, take over from its profit-seeking side.
See, the machine wasn't just staring at the price. It was scanning a whole dashboard of other indicators for warning signs, and it started seeing them. For example, the RSI, which measures momentum, shot up to 81. Now, anything over 70 is usually considered overbought, a sign that a rally might be getting exhausted. And as you can see, a bunch of other key indicators were all flashing those same warnings, basically screaming that this move was running out of gas.
And this quote, which comes from the system's own internal log, just sums up its entire philosophy perfectly. The goal is not to catch the absolute tippy top of a move. The goal is to get the main part of it and get out before it all reverses. Securing the profit you have is way more important than chasing the profit you might get.
So the system grabbed its profits, got out of Tesla completely, all before midday. So, was it the right call? Let's fast forward to the end of the day and see how that decision looks with the benefit of hindsight.
And here it is, the ultimate proof. The overall market actually finished the day a little bit up, but look at Tesla. That incredible morning rally, it completely fizzled out. The stock closed at $334.09. That's actually below the breakout level where the whole trade started. The system's exit was basically timed to perfection.
So what's the final scorecard? The machine finished the day with zero open risk. It protected all its capital, and it locked in its gains. On a fragile, choppy day like this one, that is the textbook definition of a win. You survive, and you advance.
But just when you think you've got it all figured out, the story throws a curveball. There's a self-critique from the source material itself that actually questions the whole system. It basically says, hey, this all sounds really sophisticated, but it might not have the true scientific rigor you need to be reliable in the long run. It's a pretty surprising moment of self-awareness.
And that's what I want to leave you with. In a world that's obsessed with complexity, with fancy algorithms and black boxes, how much of that is a real, measurable advantage? And how much of it is just, a comforting illusion that gives us a sense of control in a game that's fundamentally unpredictable? That's the real question at the heart of the machine.